So are you earning a salary, renting out property? You have a side business? Are you earning income from online platforms? This episode is for you. So as an employee, you have a responsibility, number one, to ensure that the tax deducted from your salary is remitted on a monthly basis by your employer. Hello and welcome again to Thrive Thursday on the Prosperity Thrive Drive channel, where we thrive boldly and prosper fully. My name is Charity Mwangi, a financial consultant and your host. So before we move on, allow me to thank and appreciate the more than 100 of you who have subscribed. I appreciate each one of you. Thank you for coming back. Thank you for watching our episodes. We've so far uploaded 5 episodes. Thank you for engaging with me, for your comments, for your likes, and sharing this content with other people. I really appreciate. So today we'll start a new series on taxation in Kenya. We'll look at different aspects of taxation. We'll look at taxes affecting individuals in Kenya, and we'll also look at taxes affecting companies in Kenya. So today we'll be looking at taxes affecting individuals in Kenya. Are you earning a salary, renting out property? You have a side business? Are you earning income from online platforms? This episode is for you. So we are going to look at the main taxes that affect individuals in Kenya, how they are calculated, who should be paying for it, and how you should stay on the right side of KRA. So let's save money, avoid penalties, and grow financially compliant and wise. So the first tax we'll look at is pay as you earn. And this is tax deducted from individuals in gainful employment. So companies that have employees are required by law to deduct pay as you earn on a monthly basis and remit the same by 9th of the following month to KRA. So as the companies remit the payment of pay to KRA, they are also required to file the returns for the same. So what you need to know as an employee, there are certain amounts that are allowed by law to be deducted before determining the taxable amount. Remember, your gross income is not the same as the taxable amount. Your gross income is the total amount that you receive from your employer, but the taxable amount is a portion of your gross income that is used to determine how much tax you are going to pay. So there are some amounts that are deducted from your gross income to determine the taxable amount. The first amount that is deducted from your gross income is the affordable housing levy at 1.5%. So as an employee, you contribute 1.5%. So that's one of the amount that is deducted from the gross income. The number 2 amount that is deducted is your contributions to SHIF, the Social Health Insurance Fund, and this is determined by the gross salary that you earn. Number 3 is the mortgage interest up to an amount of 30,000 shillings. So if you've borrowed money from one of the 6 financial institutions specified to purchase or improve premises that you're residing in, the interest that you pay for that mortgage is an allowable deduction. Remember when you were talking about the debt, the different loan repayments method, we talked about the installment, the principal amount, and the interest. So this only caters for the interest amount. The 4th one is your contribution to a registered pension or an individual retirement fund, and this is allowed up to a maximum of 30,000 per month. The other thing we'll look at under pay as you earn is the relief given by the government. We have number 1, the personal relief, which is currently at 2,400 per month. And then also we have insurance relief, and this is for individuals who are paying premiums for life or education policies. And this is given at 15% of the premium paid. So for example, if you're paying 5,000 towards an education policy, then you're allowed a relief of 15% of that, which comes to 750. So as an employee, you have a responsibility, number 1, to ensure that the tax deducted from your salary is remitted on a monthly basis by your employer. How are you able to check that? You just log into your iTax portal and go to the Ledger tab, and you'll see all the tax transactions that relate to you. Number 2, at the end of the year, to enable you file your returns, ask for a P9 form from your employer, and this will help you with all the details you need to file your returns. Remember, if you don't file your taxes by the 30th of June of the following year, there are penalties that you will be charged by KRA. So I'll demonstrate a pay-as-you-earn calculation for someone earning a taxable income of 950,000. Remember, we talked about the difference between your gross income and the taxable income. So in this case, we'll work with the taxable income. So these are the monthly bands for the payee and the annual bands. And this is the example that we're going to use. And these are the tax rates based on each band. So on the first 24,000, the tax rate is 10%. And that will give 2,400. The next 8,333, the tax rate is 25%, and that will give 2,083.25. The next is 467,667, and that is charged at 30%, and that gives 140,300. Then the next amount of 300,000, so meaning any amount above 500,000, and the 500,000 is from the 467,667 plus 8,333 and 24,000. So that next amount of 300,000 is charged at 32.5%, and so we'll get 97,500. And any amount above 800,000 will be charged at 35%. And in this case, we get an amount of 52,500. So for this individual who is having a taxable income of 950,000, will have a tax of 294,783.35. And then after that, like we discussed, they are given a relief of 2,400 personal relief, and if they have any insurance premiums that they are paying, then 15% of the insurance premium will be given as insurance relief. The next tax that we'll look at is the withholding tax, and this is tax deductible from certain classes of income. There's a wide range of income that are subjected to withholding tax. So today we are going to look at a few. Number 1, it's interest. If you receive any interest from a bank, from money market fund, that interest will be charged withholding tax. Number 2 is the dividends. Number 3 is royalties. Number 4 is professional fees or management fees. And number 5 is the commission income. So the person paying you this amount will withhold a percentage of that income and remit the same to KRA on your behalf. Once they remit that amount to KRA, you will receive an email from KRA that will have the withholding tax certificate, which will have the details about the payment, the amount withheld as tax, and the gross amount that you're paid by this individual. So the person remitting the withholding tax on your behalf should do so within 5 working days from the time of the payment. So in this case, there are penalties for the person paying if they don't make the returns on time and if they don't make the payment on time. But these penalties are on the person paying, not the person receiving. This is a tip for anyone who has been deducted withholding tax. When you're filing your returns, ensure that you claim that amount that was deducted as withholding tax, because that will reduce the amount of tax that you'll end up paying for that period. The third tax that we are going to look at is the tax charged on the monthly rental income. And this is tax that is charged on rental income from renting out a property. The tax rate for rental income is 7.5%. So if you have a rental property that you're receiving income from, you're supposed to pay tax of 7.5% of the amount received on a monthly basis. And as you make the payment, you're also supposed to file the return. Remember, the tax is on the gross income that you receive. You do not deduct any expenses. So this tax you're supposed to remit to KRA by 20th of the following month. So there are penalties for late filing and late payments. For late filing, you're charged 5% of tax due or 2,000 shillings, whichever is higher. And late payment, you're charged 5% of the tax due and 1% every month that tax will remain unpaid. Number 4, we'll look at tax charged on business income. And in this case, we are looking at businesses registered as sole proprietorship. So income from these businesses is accounted under the individual's PIN, and so it's the responsibility of the individual to calculate, pay tax, and file returns. Number 5, let's look at the digital service tax. And this is tax charged on income earned from digital platforms. So any individual earning income from content creation, YouTube, freelancing, and any other digital app, they are expected to pay digital services tax. It's important to note that KRA now collaborates with some of these payment platforms to track digital incomes that any individual receives. Number 6, let's look at capital gains tax. And this is tax on profits earned from sale of property, land, or shares. So the rate is 15% of the net gain after deducting the acquisition costs and legal fees. You need to know as an individual, you're supposed to declare all your income. Number 2, you're supposed to be aware that your KRA PIN will be used for some transactions. For example, when you're acquiring land, when you're buying a motor vehicle, or when you're registering a business. So how do you stay compliant? Number 1, ensure that you always file your returns. If you don't have any active income, ensure that you file nil returns. Number 2, if you're in business, ensure that you keep all the records concerning your sales, concerning your expenses, concerning any tax deducted. If it's VAT or withholding tax, ensure that all those records are well kept. So as a financial consultant, I've seen so many people and businesses being penalized by KRA because they didn't do what they were supposed to do in terms of tax management. So taxes don't have to be scary. The more you're informed, the better you plan, grow your income, and avoid penalties. So thank you for joining me in this first tax series episode. Please subscribe if you haven't done so, like, comment, and share this episode with someone else. Until next time, see you in our next episode of Thrive Thursday.